Good afternoon, everyone, and welcome. I'm joined today by three incredible investors. We have Manish Muthal from Maverick Silicon, Adit Singh from Cota Capital, and Kike Miralles from Intel Capital. I'm David Goldman. I'm a partner at Celesta Capital, and we're here today to try and share a little bit of the investor view on what we're seeing in this market at is probably one of the most exciting but also noisiest times in history. So let's jump in, guys. And if you want to just give 30 seconds each to introduce your fund and tell us one company in your portfolio that you think is emblematic of your investments in AI infrastructure. So Manish, if you want to start.
Sure. So I'm Manish. I'm with Maverick Silicon. We are 2 years old, so relatively new. We are 100% focused on the semiconductor ecosystem in terms of our investments. We've been fairly active in the space. Upscale is one of our investments. We're very proud of Barun and team there. But the investment that I would like to highlight, which kind of goes around our thesis of what we call the pull-through that's happening around the compute within these large AI data centers. So first, the thesis itself, right? So it was obvious to us that the compute intensity of AI workloads is exponentially higher than the workloads of the prior era. But what we also realized was, as compute fundamentally changes, what's going to change is everything around the compute, what we call the pull-through. So as the 10 kilowatt rack in a data center, in a cloud data center, evolves to a 300 kilowatt rack and then evolves to a megawatt rack, everything around the compute engine changes. So that's where we focused our investments around in networking, both at the data link layer as well as at the physical layer, at storage, at memory, at security, at power delivery. So the investment that I would like to highlight is the one that we made in the security space, a company called Axiato. This company builds what is called as BMC, or a baseboard management controller, but it has integrated the BMC with the trust processing module, with the root of trust, and the LAN on motherboard to create a highly integrated solution, and added a bunch of AI engines to be able to essentially detect threats and stop threats at the hardware layer at boot time across these AI servers and AI infrastructure. Super proud of this investment. We are now in production with the silicon and expect to get into revenue next year, or late this year.
Fabulous. Adit?
Hey guys, Adit Singh, general partner at Cota Capital, and before that, partner at Foundation, where I sourced and led the Cerebras investment. We focus on investing in the net new. So by that I mean either companies that are solving a new problem that the world has not seen before, or a problem that has not been solved by technology yet. So by definition, these are $0 billion markets when we invest, and we use our we listen for primal insight that our entrepreneurs come up with, and work with them side by side to understand that, and then bet on them and help grow and develop that. We're humble enough to know that we can't come up with our insights ourselves. So, we rely on our entrepreneurs to come up with that. The kind of company that we are particularly proud of these days, where the future is going. So fundamentally, we look for, I'm a computer engineer by training, and what I look for is a new workload. And that's been the pattern of my investing. New workloads means workloads that create a different pattern of data movement between compute, network, storage, and whatever else that's coming around it. And so the more I study the workload, fundamentally, the more I understand why, and I had a question why the existing infrastructure, whether it's CPU, GPU, DPU, whatever things out there today, cannot run it effectively. And if the answer is, for XYZ reasons, it's not able to run it, that's when I'm hunting for something net new. I tried to do this for many years before finding Cerebras, and the answer was, for the most part, I missed networking silicon, I missed video, I missed video acceleration. So I missed a lot. And then when I saw deep learning and acceleration of AI, like, this is the one something I'm not going to miss. And I was told that I'd be fired if I did this deal and if I didn't work out, and it still worked out really well. And what I look for now is the same thing, a new workload. And I'm still hungry to find one. Haven't found one yet. For the most part, it's been investing slightly above from the hardware to under the model, or from the software to the physical world. And currently, I'm doing a lot of work in physical AI, but particularly real world physical AI. And the company that I'm really proud of right now is a company called Tote that I'm involved in. And Tote has built software that actually controls the hardware of physical gas stations and stores. And those are very, very large markets. And without changing anything, all agentic. And they're on a tear, and they're getting lots of customer traction right now.
Fabulous. And Kike?
So I'm Kike Miralles. I'm with Intel Capital. We're the venture arm of Intel. We've been around since 1991. The mandate of the fund is to invest in the future of compute, including both software, things like AI and cloud infrastructure, to hardware, including semiconductors, photonics, quantum, robotics, and the like. Typically, I would say sweet spot is the Series A, but seed to be pretty much fair game. And then I would say the company that we would want to highlight is Muon. Recently there's been a lot of talk about the bottleneck trade in semiconductors, how everyone's pursuing companies that represent component bottlenecks to, this CapEx wave that's happening. But at the same time, the reality is that deploying AI chips and AI compute is fundamentally a systems problem. And the idea behind Muon was, if you co-optimize together the compute, the memory, the thermals, the power, you can believe that you can actually deploy faster and with a 10x better density and efficiency. And so we backed Muon with that thesis that it's not just about the components, but it's also about a systems view of compute.
And Kike, let's actually stay with you, because I think coming from Intel Capital, you're going to have some unique insight on this next topic. So semiconductors is kind of an interesting industry because technology roadmaps are very public. So you can take something like glass substrate and look at what Intel and TSMC are saying, and they'll be telling the market it's coming 3-5 years in advance. So as an investor, when you look at those roadmaps, how far in advance of when they think they're going to release it do you feel comfortable making an investment? And do you think that your investment can speed up those timelines if you pick the right technology?
Yeah, so I would say, we like to invest before, these technologies get to market typically. Like sometimes we do when there's already some revenue, but I would say if you're invested in revenue companies, likely you are at the growth stage more than early stage. But we also don't really like to do the science project phase, I would say, particularly because in semiconductors, things can take a long time to be reliable enough. So I would say it's a delicate balance. Typically, when companies go very public with their views on topics, like the most likely outcome is that there's already several startups working on a problem. And so you have to be early enough that when these companies started to really care about this, these companies are around to be the solution to their newfound problem. But you cannot be that early that absolutely no one is interested in qualifying your technology. And so the pain point has to be real, and it has to be, within sight of your target customer. So I'll give you an example. Like we have been investors in IR Labs since 2018. This is a photonic interconnect company working on co-packaged optics. And, we've been investors since 2018. Yet, when we have seen like an extreme urgent need for co-packaged optics has been, over the past year and a half, and going forward, that really tells you, when the need is real. Like suddenly, like qualification processes suddenly like become urgent. People start needing more stuff. Like, however, if it's not urgent, then you start getting trapped into the valley of death of, well, we'll see, who knows. Now, to the question of kind of how early, I would say to the second question, it does depend on, is there something that we can do to impact the outcome? Because it's true that on the one hand, we can have better visibility than other semiconductor investors, by virtue of being attached to Intel and knowing what Intel's thinking about. But at the same time, it's even more powerful when you meet a company and you're like, well, we can actually impact the outcome here. Like, we can take this company and help it be successful. And of course, that helps when you're making non-consensus investments or when you're taking bets on areas that may not be yet obvious.
So if I may add to that, when we started Maverick 2 years ago, one of the deliberate things we did was we wanted to have strategics in the fund as well. And the reason for that was when I was with Intel and Xilinx and other tech companies, my background is more operator turned investor. I used to work very closely with Intel Capital and other corporate arms. And what we had realized back then was some of the early stage investments that were being made in the realm of corporate VCs, especially in the last 10, 15, even 20 years, did not see enough private capital in the growth stage. So I could see many companies that I helped sort of fund when I was in the BU working with the corporate VC arms. And I would see that these companies struggled at Series B, Series C stage. So we started out actually wanting to create a vehicle that was focused on that to be able to complement the corporate VCs. And I have a good example coming on that soon.
Manish, maybe let's stay here. You heard Kike talk about it, and I'm sure you're going to hear it in many other things. There's a lot of bottlenecks that people are very publicly discussing within AI infrastructure, whether that's HBM, it's CoWoS. Have you guys made any investments where the bottleneck was the thesis, like you were trying to specifically invest in a technology to solve one of those bottlenecks, or conversely, have you guys not made an investment because you thought that there was some supply chain issue that couldn't be worked out?
Yeah, so I'll give you an example, which is part of the thesis was related to supply chain. In fact, it builds on what I was just saying about supporting companies that were started in the corporate VC world. And the example I have is exactly the same that you highlighted, which is Mion, right? So we are super happy to now come into Mion, supporting Intel and the existing team that came out of Intel. And the main thesis was around really the compute memory, the memory wall, and how to bring compute and memory together in a 3D packaging solution, which is where most of the innovation frontier is now, to be able to scale in and deliver a more energy efficient architecture going forward. But part of the thesis was also around how can you tackle the memory wall, especially the bandwidth wall challenge, without having to depend on the scarce resource of HBM. So one of the key things that Neon really enables is the ability to take standard DRAM stacks and stack it along with the compute with the vertically delivered power and the right thermal solution to be able to get that bandwidth that you critically need for AI workloads, especially in the decode phase of the AI workload inferencing, and do it in a cost-efficient manner by addressing some of the supply chain challenges of substrates, HBM, and so on.
Adit, you've been a little quiet. Let's go to you.
Oh, I've nothing more to add here. Fantastically said on this one.
Yeah.
We can.
Well, so, you talked about making an early investment while you were at Foundation in Cerebras. And I think in the last 12 months, we've had the $20 billion Groq deal. Cerebras has gone public, it's over $50 billion in market cap today. When you look back on the original underwriting, and even as you think about companies today, have those deals changed what you think about as the potential upside, like how big these outcomes can get? Or were you always thinking that it could be that big?
I definitely did not think it would be that big. This space has surprised. I was 33 years old when I found that investment, and at the time I was told that if you 10x your money, you're a great investor, and I was looking to essentially stay relevant in the venture business and not lose my job and just get 10x. And that was my thinking in the bottom. And I really wanted to make sure the biggest check out of the fund actually performed. And Cerebras didn't have any revenue for the first 5.5 years. So one of the things we realized is that people don't buy chips, people buy inference, right? So all this talk about chips is good, but the product is something much higher level. And we, about 4 years into the journey, decided that we're going to build an entire stack so that the customer buys inference. And so what Cerebras is hardware-enabled inference, but the product is all about inference. So people can call it semiconductor, this, that. Of course it is, but their product is a full stack, very much the full, which is also NVIDIA's offering, which is they sell inference at the end of the day. And the market for at the time was literally AI picking up cats and dogs, right? And that was deep learning at the time, so there was no market. I did not know how big this market would be, and I'm the first one to say that in 2015 I got lucky. I was the first one to say that. But I would say I've been wrong even more. People asked me at the time to even whether NVIDIA was like a $5 billion market cap company or something at the time. And I said, that's the top, as a peak it'll get. And even then, NVIDIA has gone to what it's gotten to. So I've been wrong consistently about how big this market has been. And but what I do know is when I see an early stage investment, I know what it looks like. I can see line of sight to 10x or more. Anything after that, it happens once in a while. And this time I got lucky.
Manish or Kike, have either of you guys made any changes to your underwriting or how you guys think about deal exits when you're assessing investments because of this?
So, I mean, actually, one of the things that I say quite often is that there is such a thing as trying to be too smart, because, like, for example, when you think about an investment like Cerebras, like, I'm sure that there's 100 reasons why at inception you could have thought, the market's not going to be big enough. Maybe this doesn't make sense right now. There's no blah 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 blah. At the end of the day, you could not predict that happen, and then you have the biggest IPO in, I don't know, many years before SpaceX did the thing. And so I think the biggest tension in the current AI super cycle is this tension between the traditional semiconductor view of, things are this size, this is what exits look like, these kinds of companies exiting this way with M&A from these players, and the confronting the reality that maybe this time is different, and maybe it's different for a period of time, but can you predict how long the period of time is, or are you going to miss on all of the activity just hoping to be right 10 years from now? So there's I think it's for those who have been in the semiconductor ecosystem for a longer period, there's an interesting tension there between what is really different this time, what is maybe driven by narratives versus by underlying demand, and what does a healthy investment thesis look like in a world where maybe you just cannot predict how big things are going to get.
Yeah. To me, it comes down to people more so, right? Like, I look for how fearless they are. I look for what non-nervous insight they have about, which in this case, Cerebras was like, SRAM is going to win. Believe it or not, Cerebras has no memory issues. All the challenge that people are talking about, Cerebras uses pure SRAM. So, which is not a bottleneck right now at all. And then a fun first principles understanding of the workload. And there's no need to overthink this for VCs. We are underwriting it for 10x outcomes. Anything above that is lightning has struck, which is what happened this time.
Manish, we're sitting here midway through 2026, and each of the major AI labs is working with at least one custom ASIC. You've had one of the biggest IPOs of the year as an NVIDIA competitor, and yet they just had a completely blowout quarter. So what's your latest view of the NVIDIA CUDA software ecosystem as a moat? Is that still a key piece of their dominance, given you have people moving to different accelerators? Or are there other factors that are kind of driving their continued success?
Yeah, I think this came up in the previous panel as well, right? So I think if you look at NVIDIA, right, I mean, obviously the company has done phenomenally well, and we expect the company to do well going forward as well. But if you look at the moat that NVIDIA has built over the years, I think there are multiple dimensions to that moat, right? CUDA is definitely one big dimension to that moat. I would say that that moat is much more significant in training than in inference. If you look at training as a workload, super high complexity, super high requirements from an availability standpoint. The cost of failure is extremely high. Switching cost can be extremely high because once you optimize your cluster for a given architecture to get high utilization, given just the cost and the time to go build a cluster, right? The dynamics of the AI training workload are such that it's extremely difficult to kind of switch from one architecture to another. Cost of failure is just too high, right? So the CUDA moat and the ecosystem around that is a huge moat for NVIDIA in training. When it comes to inference, I think the world is different, right? I mean, the software is still complex, perhaps not as complex as training. The cost of failure is definitely less in inference than in training. You can experiment with different architectures, but most importantly, the economics are all driven by tokens per dollar. That's what you monetize, tokens per watt, which drives your operational costs. And as such, I think there is more appetite for customers to try out different architectures, and that's what leads to potentially adopting different architectures as we have seen. The other dynamic there is the inference market is super large. We saw some of those charts in the earlier panel, and we expect that it will continue to sort of fragment across different optimization points. So we'll see more and more heterogeneity in inference clusters, and that gives rise to more architectures and hence less sort of a moat from a CUDA standpoint. But the other dimension is also the systems expertise, the rack level optimization, the data center level optimization with NVLink and other technologies that NVIDIA brings to bear when they engage with customers. And that's an important element that we should not forget when we talk about the moat that NVIDIA has.
So how much of that willingness to try new architectures do you think is driven by fundamental differences between inference and training versus the fact that there's been a shortage of supply of almost every kind of accelerator, and so in order to get what you need, you kind of need to be willing to take what you can get?
That has played a huge role as well. Absolutely. I think the supply chain dynamics and the shortages that the industry has seen has played a huge role as well. But I think it's the economics, right, that people have been wanting as they deploy more and more inference, and having that choice across different architectures from GPUs, multiple solutions on the GPU category to purpose-built ASICs, right, that tier ones have deployed, as well as the newer startups that we're seeing that are some of them getting gobbled up, some of them are still independent, but have a bright future ahead of them.
Kike, export controls and sort of a desire for indigenous technology have driven countries around the world to build both sovereign AI clusters, but also try and invest in domestic sources of chip companies. When you guys think about this sort of market, do you view it as a one-time build-out, or is this going to be an enduring multi-cycle trend?
So I would say that sovereign AI is like the driver behind it is control rather than isolation. And so when I think about the market, I try to split it in kind of three parts. Like one is the physical build out, one is the cloud infrastructure that sits on top of it, and then you have the regulated applications and the, say, the customized models or whatever you would want to run on top of that. And so in my mind, what I find hard to underwrite is the notion that we will have a bunch of national champions in chips and frontier models that are driven just solely by this need of having sovereign AI. Because while it is possible that you can get good enough products, for me, the question is, can they be good enough consistently over time when, potentially, for example, shortages just go away and you can just source the same chips as everyone else does. And when perhaps open source models are perfectly capable of addressing your needs and you keep full control over that. And so I would say the build out piece, I think a little bit more as I'm not sure if a fully one-time thing, but I would say the vast majority of the spend, I would say, is just the fact that you need to catch up to a new tool that did not exist before. You have to create all of the infrastructure to be able to leverage it, and then you have to maintain it and expand it as necessary. My guess would be that on the software side, we will trend towards open source and kind of somewhat standard stack. And that where we will see most of the enduring value, it's going to be on what comes after, like all of the integration, compliance, security, this fine tuning of models for your sovereign needs. All of this is where I think you could see more durable value. The question for me then becomes, what part of that is really venture investable? If you start from the assumption that maybe you don't want to deal with a foreign company doing that last mile for you. And so does that mean that we end up with a very fragmented ecosystem of national players that may not be venture scale, but may perform a vital service to their economies? So I think for me, that's the big question, I would say, in sovereign AI.
So how about when you think about maybe the role that export controls have played as sort of like an offensive economic weapon, where perhaps there are some regions or countries who are worried that they could be cut off from NVIDIA chips in the way that China was. And, obviously no one wants to get on the wrong side of the US anyways, but if for whatever reason that happens, like, do you think that there's going to be more national champions for that reason, even if they're not quite as good?
So I think the challenge is, one, I think there will be, people will try, but I am not entirely sure about what the odds of success are. I would say China in that sense is its own animal because they have a large enough internal ecosystem, internal scale to justify all of that. I find it harder to believe that most other regions in the world will be able to do the coordinated effort it takes to pull off something like this. Because it's not just, do we have chip designers that are able to do this? Then do you have the foundry capacity? If not, then you're back to, for example, working with the US or working with Asia. Like, you start to stack these challenges. I think, for example, Japan's creation of Rapidus has been an interesting play in that regard. But to me, then the question becomes, does Rapidus then get Asian or Japanese ecosystem on top of it? Or do they become another manufacturing house for possibly US designed chips? So I think the interplay of how that comes together is not entirely clear. But I do think that there is enough uncertainty and risk around it that people will try to see what the alternative escape valves would be.
Yep. No, I agree. I think I agree with your assessment that these sovereign AI initiatives will provide some short-term tailwinds to some opportunities, but longer term, I think it'll be the industry structure and the economics that will determine how sustainable these investments will be.
So ultimately, you don't feel like they're willing to run the costs that China has in terms of feeding those ecosystems long enough?
I have a slightly different view on this. I do think that there's a lot of analogies that in the telecom industry that we can learn from as this plays out. There's a reason why initially all the different countries started building their own wireless networks, and they had their own carriers in their countries. And initially, maybe in the first 5 to 7 years, the first world countries, for lack of a better word, looked very, very smart about their product choices, experiences. But as the technology will mature, there's a lot more innovation happens in countries that don't have as many resources as we do here. And you will see rapid evolution of new techniques that will cut down the cost of inference, make AI down to, the hundredth of a penny of what it is today. And I do think that sovereigns may not be a thing, but private companies in those countries owning AI clouds and delivering AI services with amazing incentives to cut down costs and make a lot of money will be a thing.
So it sounds like everyone sort of agrees that the workloads are going to be the same across places, and it's really more just like a breakdown of who's going to be serving those workloads. Maybe like a token is a token is a token. Do you think that that's universally going to be true, or might we have different workloads for things that are built around different cultures, different languages? Is there any chance that you guys see it play out a little bit differently?
In what sense? Sorry.
In the sense that to the degree that you have different workloads, so for example, you have more heterogeneity in the data center today for prefill versus decode, you have different hardware for each part of that. When you have different languages, different cultures, developing different AI for different markets, where there might be more of an emphasis on cost at giving up latency, for example, because maybe people are really cost conscious, but they don't value their time a lot. Could that create the conditions for different companies that are able to serve those markets as national champions?
I would say so.
So I would say I'm not sure about the different countries and different languages and so on, right? But I feel like the underlying infrastructure will likely evolve and will accommodate a lot of different architectures and heterogeneous step infrastructure going forward. And that will give rise to opportunities for different architectures. And a simple example here is as we move from LLM Gen AI to agentic AI era, if you look at the network, the networking infrastructure that needs to support agentic AI, that's going to look different than what was for LLMs and Gen AI era. And fundamentally, what you look at in the agentic AI era is that the average utilization of the networking infrastructure in these AI clusters is going to be much higher. And that will lead to a different set of technologies that need to get deployed to be able to manage queuing latencies and deliver sustainable performance at the right latencies and interactivity at those high utilization levels. So I do think that as we evolve in our workloads, and we will see more fragmentation, more adoption of different architectures across the globe.
Yeah, one thing I'd say, guys, in early markets, I know that the conversation is a lot about components and speeds and feeds and how things are moving fast at the bits and bytes level. But I do think as an investor, in early markets, people buy solutions, not best of breed. And I do think that over the next 5 to 10 years, the winners will be companies that package up all this stuff correctly and deliver the product at the right level of abstraction, which the transaction happens at. And at that level, whoever has the best performance will likely to be the one to capture the value. And so that means a lot of different things have to work together. NVIDIA, our favorite company we talk about, is as much a software company as a hardware company. It's as much of a systems company. They have tuned the heck out of every little piece to make it work right. And entrepreneurs need to understand that piece as well when they talk to us, and otherwise we see through all that very quickly. Generally, component level companies become more successful as the market matures further. And we're not there yet.
Maybe one last one. Adit, AI infrastructure companies can be unusually concentrated relative to maybe some other markets. You have companies that go public with maybe one hyperscale customer and they're worth 70, 80% of their revenue. Mm-hmm. Or you can be writing an investment memo and acknowledge that there's maybe 6 to 8 possible buyers of the company. Mm-hmm. How do you work with that tension, and how do you think about that when you invest in these areas relative to other markets?
Yes. You have to if you just look at the facts today, that is the reality of the market. And that's the reason why Jensen and team are creating new customers to getting them started by another category I missed is neoclouds. I thought neoclouds would never be a thing. And now I saw all those companies and I passed on a bunch of them. And little did I know that the chip companies themselves and the governments and others will be propping them up to make sure that they exist as an ecosystem to reduce these concentration issues. So this market on first principles is shaping up to be completely different from what I thought it would be. People are doing irrational things in the short term to hope that the long term will turn out to be right. And I do think that most of the things that are being done today are more good than bad. For example, NVIDIA propping up all these customers to make sure that they reduce their market concentration issues. But what I there's other things that have been done that are pretty stupid. Like all the deals I believe Microsoft has done to prop up OpenAI and others are going to be turned out to be very stupid. I think Microsoft is left with nothing right now at their core. And even though they own early stage stock in all these companies.
Fantastic. Kike, Adit, Manish, thank you so much for joining us.
Thank you.
Thank you.